Martin, we just heard from you in that statement what this deal will do for UPL. What does it do for Element?
So, first of all, it creates a brand new start for the businesses that used to be our specialty solutions business. It completely de-risks our balance sheet, changes our financial profile, increases our free cash flow, grows our reported EBITDA margins. There's a lot of benefits that come from this transaction, which is why we pursued it.
Now, you split off the agricultural business. That brings in a lot of money through the front door. What's the plan? Where is that money going to be spent?
So we'll start by paying down our existing indebtedness. We'll bring it down to a little bit below $1 billion. Depending on the timing for our closing will depend on how much below $1 billion it'll be. And we will use our, if you like, capacity to do a share buyback. And really that will depend on where the shares are trading around the time that we close. But the board has approved a $750 million allocation for share repurchases. And again, depending on where the markets are at that time will depend on how aggressive we will be with that program.
But I'm just looking through the shareholder register, and it's a who's who, if you like, of obstreperous investors. You've got Bill Ackman in there, you've got Larry Robbins in there, you've got Paul Singer through Elliott Management in there. They back you as a deals guy, not as someone who's going to go out and do an aggressive buyback program, pay down debt. They want to see you go out and do M&A. So is that going to ultimately be the direction of Element? It's going to be used as a vehicle to go and acquire other companies?
It's a good question. I mean, for some people, they're obstreperous. For some people, they're great supporters. Those investors have been great supporters for us. But it's not just about M&A. They see us as capital allocators. And capital allocation, in a way, a share buyback is internal M&A. So, they're looking at what we're doing as value drivers, and we're all about creating shareholder value. They understand this transaction and what it means. It's not about, where the stock trades today, but where it's going to trade over the next 12, 18 months and beyond. And we're repositioning the business. They're very supportive of that. I was talking to one of those investors just a short time ago. It's the right strategy for the company, and we're also positioning ourselves as over the long term to really become a much more attractive investment candidate for the long only institutional type investors, where I think with our level of leverage on the balance sheet and the fact that we were in two very different sectors was perhaps not as attractive as I think it will be post divestiture.
I just want to point out the DDIS function for PAH because we can see how much debt is outstanding and what you intend to do, which seems really pretty phenomenally ambitious. I also want to ask you what you're thinking of doing with the remaining company, because you have a whole nother company now, specialty chemicals for electronics and other things. And just during the week, we heard a very strong case for another specialty chemicals company, Huntsman, which also said it's on the lookout for acquisitions or maybe even to be acquired. Is there anything out there that's tempting?
Well, we're not looking to do transformative M&A. We've said publicly at this point that we're going to look to do, in terms of M&A, bolt-ons that are additions to our existing businesses within the group. But if you look at the profile of our business, we've got a company that has EBITDA margins in the mid-20s, strong organic growth that's above GDP, CapEx that's less than 2% of sales, very high free cash flow returns, top class free cash flow returns. And if you look at the multiples that those types of companies trade in their peers, it's in the sort of mid-teens of EBITDA multiples. And so from our perspective, we're very focused on getting to what we internally perceive as being an appropriate valuation for the business. Some of that is repositioning and making ourselves more attractive as a business to investors. And then we'll see where we go for M&A. But I think that doing more aggressive M&A until we've done that and achieved that for our shareholders is probably premature.
Martin, it's Ed again. I have a sort of M&A geek question. This process, it started about a year ago. I think about a year ago, UPL were even rumored as potential buyers back then. What took so long? Can you give us a sense of sort of how the process played out?
Yeah, first of all, patience, perseverance, doing what we think is right for the company rather than trying to, the right thing rather than necessarily the right now thing, if you like. The fact is the whole ag industry was in a much more unsteady state of transition a year ago. As you know, the Dow-DuPont transaction and various other transactions taking place at the same time. There was a lot of noise, and people's focus was elsewhere. I think the reality is UPL were always a candidate. They were always a good fit. We came pretty close some time ago. It didn't work out. Nobody burnt any bridges. The interest remained. And I think that today, their business is stronger. The macros are healthier. Our business has continued to perform and hit all the projections that were laid out for it. People saw that. And I think the value that we always thought was there is now being realized. And we're very pleased with that.
Real quick, Martin, why the stock reaction today? Why down 3.25%?
Well, again, I'm not in the stock business. I'm in the business. So, I don't really care where the shares trade today.
Well, you just said one of your goals was to have the stock price trading higher.
Long term. I don't have trading for a day. If I had to trade for a day, I'd be in a different business. What I care about is what the business is intrinsically will be worth. But in fairness, the stock has been drifting up, I think, on rumors. There have been multiple articles and speculation in the press about a transaction to be taking place. I can't remember what percentage the shares are up in the last, couple of months on the back of those rumors. But the reality is, it's not about today's trading. I think that the news is now out. People are trading in and around that. I think the volume, from what I understand, is pretty high. But to be honest with you, the way we look at it is if the shares stay where they are, we'll have a much more aggressive buyback program, which is great opportunity for the shareholders who want to be in for the long term.
Taking a step back outside of trading and into the geopolitical world, you're a Brit sat in Miami at the moment, but with exposure to the UK where I sit right now. Martin, what are you looking at in terms of geopolitics, in terms of Brexit, in terms of the ongoing political instability? Because we're hearing companies speak out, Rolls-Royce, Airbus among them. What do you think?
So look, instability is never good. I think that, I think I was on Bloomberg with Ed some time ago, and a few weeks ago actually, and talked about my long-term view of Brexit and Britain. I think that Britain's going to be, back to where it was when I was a kid living in England, in the EU, or the EEC, as it was a common market relationship where we were back in the 70s. I think we'll eventually end up back there. I think it's going to take time. I think there's a lot of noise, a lot of politics in between. But if there is Brexit and it actually happens, I think the long term it'll look like that. Europe needs Britain, Britain needs Europe, and that's the way it is. There's just too much trading, too much wealth. Too many people want to buy Mercedes cars and BMWs for Europe to go too hard. And that's just, it's going to take time to reach equilibrium. And I think that there is a lot of noise and instability in between. But look, I'm a long-term person, and I think about these things in long term.
Yes.
And I think over the long term, that's where you're going to end up. I think that it creates opportunity for people to trade around it. That's not my skill set, so I couldn't tell you the short term.
Martin, you've had a phenomenally busy year. We've obviously had you on talking about a couple of deals for Nomad. You had the stuff going on at the beginning of the year with new brands. Now we've seen the future direction, really, of the chemicals business. What else is on the horizon? What should we see coming out of you next?
Well, look, I'm very pleased with this transaction for Platform because, from my perspective, it very much de-risks and repositions the company for the long term. It's a reset that I think we needed. And, what's next for me, I look at each of these investments that I'm involved in individually. My focus has been on making sure that this Platform transaction was executed. The team did a fantastic job. It took a while, but it all worked out extremely well. From my perspective, now the next step, I don't know. It's I'm an opportunist, as you think you well know. We'll see what comes next. As you know, we have a vehicle called J2. I'm looking separately at other opportunities in other industries. But right now, today's all about Platform.
Yes, so just give us a little hint, Martin. Has something come along yet, or are you still looking?
Still looking, but we're looking at a few things.